Kate, have you got another speaker for me?
Yes, we've got Sunny Harris in the room.
Sunny, can you hear me? Hello, hello, hello. Hit the unmute button.
There we go. Unmute.
Okay.
Hi, John. How are you?
Magic.
Magic.
Hello, Sunny. First time speaker with the Mad Hedge Fund Trader. Where are you broadcasting from today?
San Diego, California.
San Diego. You know, I went to UC San Diego for summer school.
Oh, did you really?
Yeah, took chemistry, lived at La Jolla Shores, used to get up every morning and jog on the beach to the Scripps Pier and back.
Very nice.
This was back when students could afford to live at La Jolla Shores.
No one can anymore.
Now it's billionaires only.
Correct. Absolutely.
Okay, so why don't you go ahead and get your PowerPoint up here and I'll give your introduction. Sunny Harris is a full-time trader for 41 years and programmer, 52 years. Do you remember Cobalt and what was the other one they used to use? Cobalt and Fortran. Are you a Fortran programmer?
I am, and COBOL and assembler language.
All right.
And of course, easy language.
Let's see how old you really are. Do you remember ferric core computers?
No.
That goes way, way back. That's pre-silicon computers.
Yeah, I started programming in 1969.
Yeah, that's about when I started too. Sunny published Trader's Catalog and Resource Guide magazine for 8 years, beginning in 1993. She sponsors the Money Mentor on the internet, was rated the #1 trader in the under $10 million category by Stark Research, achieving a 365% profit and 178% profit. Ms. Harris' first book, Trading 101, How to Trade Like a Pro, sold out in the first 2 weeks and continues to be a financial bestseller. Her second book, Trading 102, Getting Down to Business, was released in October 1998 and also has achieved record sales. In early 2000, Harris released Electronic Day Trading 101, addressing the basics of trading online and through direct access brokerage, followed by Getting Started in Trading 2001 and TradeStation Made Easy 2011, which won first place in the prestigious Star Awards. Sunny is now writing her 7th book with Sam Tennis, Easy Language, Object-Oriented Programming Made Easy, due out in 2022. In addition to full-time trading, Sunny continues to write more trading books and provide consulting for individual and institutional clients, including custom tailored mentoring and custom program indicators and strategy. I actually have written 4 books in the last 4 years. So I'm keeping up with you in the publishing front.
Well, congratulations.
So the way this works is you have until 5 minutes before the hour to deliver your program. There's a chat box on the right where people can ask questions. Let me get my chat box up. There it is. And I will be sitting here listening to your presentation. So I'm going to mute myself and you have the floor.
All right. Thank you, John. Today, we're going to talk about trading in bull and bear markets with the indicator that I use on everything. I call it SunnyBands. Before we start, let me warn you that all trading is risky and only trade with money that you can afford to lose. And if you'll read through this, I will post this slide, a PDF of these slides later today on my website, moneymentor.com. So read through this when you get there. Today, we're going to compare and contrast simple moving averages, exponential moving averages, Bollinger Bands, Keltner channels, and SunnyBands, so you can see how they all work. So John said everything. I don't need to go through my resume here very much. I've been trading for 41 years, and I've created testing methodologies that are de facto standard in the community. And I'm missing a degree there. I have 3 degrees in mathematics and 1 in photography. The #1 trader rated by Stark Research. I've been programming and testing since I started trading in 1981. And I started teaching other people to trade in 1986. There you have my books. And the new one with the big title is Easy Language Object-Oriented Programming Made Easy. I have a full list of my appearances and all of my articles on my website. If you'll just go to appearances, I think. And then you click on seminars and editorial, it'll be there. So here we're going to talk about the steps, the indicators, and the strategy to looking at all these different moving averages. I'm going to put a strategy on each one so we can compare profits. Not everyone can trade the same system. What's good for the goose in this case is not necessarily good for the gander. I like 1-minute bars and you might like daily bars. You might not want to sit in front of the computer all day like I do. And I love it. It's my things. But a lot of my clients are only want to trade on daily bars, or only want to trade the open, or only want to trade the close. So you need to choose your own time frame that works well for your day job or for your penchant to sit in front of a computer or not. Bonds, for instance, have a rhythm of 45-minute swings, and the S&P swings on a 15-minute chart. Currencies swing on daily charts, and mutual funds on a weekly chart. So you must find the rhythm that's right for you, and it's not going to be the same one as your next door neighbor is going to have. So here we have a chart, 2 charts, and you can see that they have different rhythms by the cycles that are drawn on the bottom of the chart. And this one has another rhythm. So everything's different. You don't want to tell the market what you want to trade. You need to ask the market where the money is. And that's where I have a little indicator that tells me where the money is. And I'll show you that in a few minutes. So I start with screening the larger markets, the Dow, the NASDAQ, and the S&P, and even the Russell. And I do both in conjunction. At the same time that you ask the universe of symbols, you must keep in mind the time frame. At the same time that you consider the time frame, you must consider your own personality. There are lots and lots of things that you need to look at all at once when you're a real trader. I have clients that only want to trade the first 2 hours, or who want to trade near the close, or who want to place a trade and walk away. I do also have clients that do mutual fund switching. So you got to look at everything all at once: time frame, your time constraints, the universe of symbols, and ask yourself, where is the money? Where's the action happening? A few days ago, it was oil, not so much today. And the question that I ask of everything, and that's why the stars mean this is important, I ask, what is true? So every time I look at a chart, I say, what is true of this chart? What causes it to go up? What causes it to go down? Here we have a radar screen that shows me the different symbols. You can see these are iShares on this view. I watch the Dow, the NASDAQ, and the S&P, and a few iShares. So I scan the universe of symbols on a daily basis, and here's my radar screen setup. This chart, this radar screen, on the right, I've got it highlighted in yellow. You can see this is my PHW indicator, and if I sort by that indicator, I get the most tradable symbol on top. So you can see there from that $328, that's probably a yearly chart. You can make 328 points by if you can manage to catch all the PHW dots. I'll show you those in a few minutes. This one is on the S&P 500 with the highest PHW on dot. on top. And so what does PHW tell you? It stands for potential hourly wage. And I invented it because I wanted to know where the money is. There's only one reason to trade, and that's to make money in my book. So this tells you where all the ideal trades are, and it tells me whether it's better to work at McDonald's or trade. If you can't make more than $15 an hour, then you shouldn't be trading. So it stands for potential hourly wage. And well, there we go. Whether you should be trading or working at McDonald's. It only makes sense to trade if you can make money doing it. There are people, though, that trade for the challenge, for the excitement, and these people lose money. People trade for the powerful feeling it gives you. Turns out, in my experience, that the more excitement there is, the more you're losing. Here is Sprint with a low PHW. You can see the dots on there, but the stock is relatively flat. And this is Google. So you can see the dots show you all the ideal turning points as they go along. So this is the code for TradeStation. If anybody's interested, just screen capture that. This is how I filter by price and volume. So if the close is greater than the bottom price and the close is less than the top price and volume is greater than the volume minimum. So what I'm telling it through inputs is I don't want to trade a stock unless it's over $35 and less than 500 and the volume's over 1 million. So it plots these for me. And let's see if all the ones in the blue area meet the criterion. So CVS on this radar screen was blue, meaning it met the volume and the price constraints. So you put the symbol in lists, you insert the PHW indicator and sort those from highest to lowest, and then you select symbols within your price range filter that have the highest PHW. Let's go back for just a second. Where is it? There. So you use this PHW on your chart, and then we'll go back forward and you look for the blue area there. So I don't have them both on this chart, but if you look for only the blue ones that have the highest PHW, then you've got a tradable stock. So you put in the symbol list, insert the indicator, sort the highest to lowest, look at the price filter, and this one should show us, there we go. So PHW, this shows me this blue one has $29 potential. This one has $29.18 potential. The next one has 30, where'd the PHW go? There we go. So they're sorted with the highest PHW on top going down to the lowest, and you can see all of these have potential money in the markets. Now, I always ask, how much is enough? Do you know whether your test generates enough profit or not? We ask, what is true? Again, what is true is my favorite question. So we ask, what is true of the chart? What is possible? Should your chart generate $500 or $500,000? You need to ask the chart. And that's where I bring in my PHW indicator. And you really should know this before you begin, because why trade a chart that's flat and you're not going to make any money on it? Don't trade just because you feel like it. So this problem of how much is enough has always perplexed me until I invented the PHW indicator to tell me how much is enough. It works on any chart, any time frame, any symbol. And here's how I look at a chart. So you can see the setting at 0.2, it marks all the ideal highs and lows. So, and the PHW indicator is the first indicator I use on anything. It's probably the most important in all my work because it tells me it tells me what is true. I don't have to ask what is true. It puts the dots on the chart and tells me what is true. That answers how much is enough. And then if you have a system or an indicator that's your favorite that you put on the chart, does it match the dots? If it matches the yellow dots, or at least closely, so that you're not giving too much away, then you've got a good program. Here it is again at 0.02, and you can see there are too many dots. So you have to set the inputs for your particular chart, so you're catching highs and lows. To see how much is enough, we can look over at the right of the chart, and you can see that ideally there were 162 trades on this chart, and the ideal profit was, what is it, $2,899, and the PHW, which is 60%, is $1,100. So KC in this case could have made $1,100, and buy and hold would have made $69. So you can see how trading is, in my book at least, trading is the way to go instead of just investing. Now I do have a large stock portfolio, and I don't trade those every day. I buy and hold for extended periods, but I still do trade them. I get out when I don't trade stocks on the margin. I get out when I think they're going down, and I buy back in, hopefully near the bottom. So you read the data on the right-hand edge of the chart, and you have found your symbol if you go through this process. So how do you analyze it? Let's look at simple moving averages, exponential, Bollinger Bands, Keltner channels, and my SunnyBands. You can see here, this is two simple moving averages. And you can see that they cross over here, cross over here, cross over here, cross, 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 cross. Probably not a good idea. Simple moving averages cross back and forth a lot, and they get you in late. You can see, for instance, over here, we get in after it crosses right here on this bar. We go up, the moving averages turn down, and you would get short right here. Get short right here on this bar, which is way too late. So I don't use simple moving averages. Here we have exponential moving averages, and you can see that they're faster. Let's go back. There, simple, and there's exponential. So exponentials offer some advantages. They are faster, but you can see again, they whipsaw, whipsaw, whipsaw over and over again. Here we have Bollinger Bands, and you're going to see the difference between my SunnyBands and the Bollinger Bands in just a minute. Bollinger Bands are based on an exponential moving average. You can see the gray moving average going through the center. And then he puts two standard deviations above and below the exponential moving average. Take note of this area right here where the Bollinger Bands go way up beyond price, and down here they go down below price. Here they are way above price again, and on the right, far above price. So I'll show you in a minute what I do with my SunnyBands indicator. This is a Keltner channel. Let's go back and compare these two. There's Bollinger. I sound like an eye doctor. One or two. This is the Keltner channel, and it's been around an exponential moving average with average true ranges around the moving average. So you can see that it's not as far out of bounds as Bollinger Bands go, but still there's some problems with it. And I think I've solved them. This is my SunnyBands. So you can see what I look at here, which is when a red candle comes down and touches the bottom SunnyBand and a green candle goes up, I get long, as long as these two moving averages in the center are not flat. If they're flat like this, I don't take the trade. So the red and this is supposed to be gold line. It's gold, you can see it out here. The purple and gold lines, sorry, are my dynamic moving average. And I created this. Now I have a PhD in math, and so I use the math that I know to create this thing. And in fact, it came from work I did on my master's thesis. And I wanted something that did not whipsaw when price changed direction. So you can see here that the gold and the purple on the dynamic moving average move out of the way when price starts stagnating. So they get wider. Over here, they cross right there. And you can see they get wider as price just gyrates. So you would have been long from this. Oops, sorry about that. Let's go back. Go back one. All right. I'll just have to wave my wand here. So you get long at this point right here. Hold on because the DME is flat. We're doing nothing. Long, 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 long. Comes up, and then as it touches the band and goes down, we're short. So yes, they're all very similar, but SunnyBands is based on my DMA, dynamic moving average, which expertly avoids whipsaw. Keltner channels, as I said, are based on exponential moving averages, which by their very nature have a lot of whipsaw. And trading Keltner channels involves a lot of risk. So now that you've found your symbol, you put SunnyBands on the chart and tailor the settings. So here's what the input values look like. That's your password, open, high, low, or close, and a bunch of more inputs. You can govern just about any aspect of it that you want to. You can change the average to range distance from the top and bottom band. You can change the look of it by changing thicknesses. So there's just all kinds of ways that you can tailor this one. Here's 2.0 average true ranges. This is just one of the bands. So you can see that that's the standard 2.0. That's a 1.5, and there's a 1.2. So you can see how they squeeze up depending on the settings that you use. There's 1.0. Here I have both sets of bands, and my standard input is the teal line is 1.2 average true ranges around away from the dynamic moving average, and the outside band, the green one, is 2.0 average true ranges away from the dynamic moving average. This is something that I keep on all my charts when I'm trading. It's called Sunny bars. So you can see that the bars are different widths. Over here we have a skinny bar, over here we have a fat bar. Fat bars again, and then skinny bars. What this does is it reflects volume. So the wider the bar, the more volume there is on it. That makes it easy for me. I don't have to look down at a volume chart to find out where the market's going and where the volume is. I can see it in the width of the bar. And you can see on high volume, we go up, and then high volume, we go down. And sure enough, we take a little dive. On this move, we've got high volume, thick bars, which echoes the sentiment that we're going up on that. So here's volume on the bottom of the chart. Now see, I don't like to look at that and have to look back up and look at my chart. I try to keep my trading simple. I want everything as simple as possible. So rather than look at volume on the bottom subgraph, I look at it the width of the bars, and you can tell, all right, here's a high volume and there's a thick bar. So ABA, always be asking what is true, what is happening, which way is price moving, how far is the current market moving. So you want to know average true range because that tells you how many points the bars are moving. Also, the difference between the SunnyBands is printed at the right-hand edge of the chart, and it tells you the difference between the two SunnyBands. It's called diff, as if that's really original. And it tells me how far, because I know price moves back and forth between the two bands. So I can look at the difference between the bands and know how many points are in it for me. You want to ask what happens when the band is touched? What happens if the DMA is moving sideways? So when the band is touched and it reverses colors, I go the opposite direction. If the DMA is moving sideways, I don't like to take that trade, or I will stay in the direction I was previously at. I also look at two sets of SunnyBands on my chart. I have a 5-minute and a 15 that I'm watching this morning. And when the 15 is signaling short and the 1 minute signaling long, that's probably not a good time to get in. So I wait for the signals to match. If the difference between the two bands is $1, take it. You don't get to tell the market where to go. We want to know what the difference is. And you can see it right here. The difference is 0.8 between this outer band and this outer band. So 0.8, that's only $1, less than $1. Well, on the E-mini, it's times 50. So 0.8 times 50 is $450. Take it right there. So here from the right-hand edge, you can see all the values. It tells you that gold's on top on the DMA. When gold's on top, that's a macro way of saying these are long. Okay, if gold's on top, I'm long. If purple's on top, I'm short. Tells you here the difference between the inner and the outer bands and the angle. That's how I know whether I'm flat or not. If the angle's gray and less than 5 degrees, we're flat. Here it is it works on any time frame. This is a 1-minute chart. You can also see that my bars are different colors. So the green and red bars are intraday. The magenta and cyan bars are the night session. Again, I like to keep things very simple. So this tells me immediately, I don't have to look at the clock. I don't have to look at the bottom of the chart to see what time it is. That tells me we're in the night session. And you'll notice how differently the night session trades from the day session. Here they are on a 5-minute chart, same idea. Follow the upper band up, 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 up. And the next move after that should be down to the midline. Here's same thing on a 15-minute chart. You can see how that looks different. And again, I've got the bars colored depending on day session or night session. 30-minute, it works on anything, any stock, any symbol, any futures contract. It's all the same to SunnyBands. They don't care what chart they're on. I'll show you this because this is how I trade. This is how I analyze every single market that I look at. I like to take the signal from the longer term chart and the entry from the shorter term chart. So I've got a 15-minute on, got a 15-minute chart on the top, and the gold line is on top. So it's telling me that that's a long, predominantly long move. And then I would go over to the same time frame on the 1-minute chart and decide whether or not to take the entry. Here I have 2 sets of SunnyBands on one chart. I've got a 5-minute chart, sorry, a 1-minute chart with the dark green lines. You see the dark green bands. That's the 1-minute SunnyBands. And the one that's light green and light teal or cyan, that's the 5-minute chart. So I can see SunnyBands moving within SunnyBands, and I can tell that that's pretty much over with right there because the SunnyBands touch the SunnyBands. It's just like price touching one set of SunnyBands. When the SunnyBands touch the SunnyBands, it signals me an even stronger move. Okay, now for a long list of rules. I take the setup from longer charts. I take entries from the 1 and 5-minute charts. I enter long when the long-term chart is red or magenta and below the lower SunnyBand, and the short-term chart is also red and below the lower SunnyBand. I take profit when an attractor is reached, and I haven't told you what an attractor is. Attractors to me are anything that draws price to it. So for instance, you could have horizontal lines as attractors or trend lines or moving averages. So I call these all attractors because price is attracted to them. So I take profit when an attractor is reached or when the upper SunnyBand on the long-term chart is penetrated upward and then back down on a red bar. So it would have to take the opposite color. When the DMA is on the long bias, that means that the gold is on top. I don't expect the short trade to drop any further than the midline of the SunnyBand. So I use the colors of the DMA to tell me when I reverse position, how far I think it's going to go. And I said earlier, if the DMA, dynamic moving average, is flat, I say with the first entry of the flat period until it finds the direction. If it's a short signal, it's exactly the opposite. If it was blue and green or green going up and it turned red below the band, then I go short. If it continues on up, now that, you need to have price confirm everything. So if price were to continue on up with that signal, I reverse and go long. All traders have losses. It's just just a fact. It's a cost of doing business. You will have losses. In fact, most professional traders are happy if they get 45% of their trades right, which means 55% of them are losses. So you want to take small losses and let the profits run. So I said that opposite is true for shorts, and wait for it. Don't be jump. I have a live trading room that I do for free. Just about everything I do is for free. So I have a live trading room on Tuesday mornings at 7 a.m. my time. So this morning we started out and nothing was happening. The market moved up and it moved down and it moved back up again to the same place. So I did not take a trade. I wait for it. I wait. And my trading room is real money, by the way. It's my money. It's not hypothetical. So it's a real-time trading. So I waited for price to move and then I took a trade. So you wait for proof, you wait for price to move in an expected direction. And you need to know that there's always another trade. Take your losses fast and let your profits run. And wait for the correspondence between the charts. So we have two sets of SunnyBands there, one on a 1 and one on a 5, not overlaid as I showed you earlier. And this is why I think the overlay is so important, because I can see the chart on the bottom, I can see the chart on the top, but I don't know how they correspond to each other than to look at the price action within the bands. There's an actual trading day. Let's see. So you can see, wait a minute. Yeah, this is a little video. And I have an indicator. You hear the little sounds? I have a little indicator that makes a bing sound when the market goes up and a bong sound when the market goes down. So you can see what the matrix looks like on a real-time chart. Here's an example of a strong up move. You see it goes, gold's on top. You stay long, whereas most moving averages right in this area right here, they would cross over and then cross over again. My DMA stays long all the way up to, it's hard to read this way. I have another indicator that's called who's on top, and it puts a little set of dots along the bottom that tell me gold or purple. But this stays gold until about right there when it turns purple and signals a short trade. Here's a fun one. This is showing you July the 4th. It's moving up beyond the SunnyBands, moving up beyond the SunnyBands, and there's a red candle that goes down within the SunnyBands. I'm out. And there's why, because that's the next day and the next day. So I told you about Sunny bars. They're the width based on volume. And of course, they work on any time frame. And then I told you about session bars. These are green and magenta on the night session. And I usually use blue and red for the day session. And I like to do that because my SunnyBands are green. And not on this chart, but in real life, they're green. And that way I don't get confused between price and moving averages. So here we're going to talk about attractors just a little bit. They are support and resistance. Oh yeah, pennant formations also are attractors. Anytime the market gets in congestion, it'll form a pennant. And traditional technical analysis will say that a pennant is resolved in the direction of the prior trend. And lately that's been down, so the pennants have been resolving down. Although today the market's up a little bit, 324 points on the Dow right now. And that's likely because we're going to have Putin and Zelensky talking. So there's some hopefulness going on in the market with respect to that. I use moving averages as attractors. See congestion areas and places where price has touched over and over, and I draw them, and then I set alerts on. So when they get penetrated, my TradeStation software will give me a visual alert and an audio alert to tell me that it's been broken. Here are attractors, for instance, on a 1-minute chart. Look on the left, you can see, let's look at the lower magenta line first. You can see here, price hit it hit it again here, and then I draw the horizontal line based on those. I call it the preponderance of price. So this price touched and touched, touched and touched, so we get a horizontal line. Notice over here on the, just to the right of the center of the chart, we have another touch and another touch and another touch before it breaks through it. So there's my alert. Once that breaks, I get an alert. Here they are on the daily chart. This time they're orange. And I've marked them back over here where the preponderance of price was. And they move across, they break down below it and go right back above it. So this is like reversion to the mean, down and then back up over the attractor. Likewise here, I've got several prices that want me to draw a horizontal line right there. I draw it over, it goes above it and comes right back down through it. Here on the bottom of this, you can see attractors. You can see that they're drawn at not at the lowest low of the price. I draw Fibonacci lines at the highs and lows. I draw attractors at the preponderance of price. Again, down here where the price actually was going. Here we have pennants. I have an indicator, of course, it's called pennants, because everything I use, I've programmed into an indicator to make my life easier. So this one automatically draws the pennants on there. And you see I've drawn horizontal lines for attractors at the tops and bottoms of each pennant. And you can see what price does after it breaks through pennant. And then back over here, this is the pennant formation and it extends on into the future. So where's the Dow going these days? That chart's before today. So this, let me just look for just a second at my Dow chart. Purple's on top on my real-time feed. And price has not yet closed above the, is this 10% down? Let's see real quick. Yep. So it's trying to close above the 10% retracement. And it may or may not. And I think we're probably likely for some more downside action. Here we have two yellow rectangles drawn around price dropping. And you can see that we went out here. Again, this is, I'm afraid this is an older chart, but you can see that just beyond here, we started going down again. So another rectangle. This chart is from Advanced Get, which is a program that's offered through eSignal, and it automatically puts Elliott waves on the chart for you. The dots with numbers in them are the major waves, and the minor waves are numbered in blue. And you can see then in red, it's also marking the ABC, oops. Here we go. A, B, C, you can see the corrective waves. So if you're interested in that, get in contact with eSignal, and you can get a copy of that program. I think it's wonderful. I don't have a chart of the other one I wanted to show you, but there's a firm called Wall Street.io, wallstreet.io, and they've got an app on the web that you can run and do all kinds of system testing. And you can subscribe to other people's systems tests. So that's a wonderful thing too, wallstreet.io. I think this is not the presentation that I intended to give this morning. This is an older version, I think. So This is one of my books, so don't forget to pick up a copy of TradeStation Made Easy if you're interested in learning TradeStation and don't already know it. And I'm afraid that's it in a nutshell. This was a short presentation, and like I said, it's not the one that I intended to give, but I apologize. You can give me a call anytime, any day. I work 24 hours a day almost. Here's my phone number. This is my cell phone, so you can reach me anytime. And you can Skype me. And I've got a fax number. And of course, you can email me anytime at sunny@moneymentor.com. And please be sure to visit my website, moneymentor.com. I also have a new podcast called The Sunny Harris Show, cleverly named. And Sam Tinnis and I, my writing partner, present famous traders, like gurus and market masters. So this afternoon, I'll be posting the podcast from Saturday's interview with Tim Slater of CompuTrack and Tag Seminars fame. And the first podcast was an introduction to me and Sam. And the next one after that will be an interview with the famous Perry Kaufman. Do we have any questions? Let me look at the chat. Can this be used on NinjaTrader? That's a very good question. And no, I don't have it for NinjaTrader. It's only for TradeStation and multi-charts. The PHW code again, you wanted. That's the code I showed you was for filtering for high volume and price within a range of, I use 35 to 500. I don't like to trade stocks very much that are over 500. But so that wasn't the PHW code. I'd be happy to show you the filter if you'd like. And thank you for the link, Kate. That's my products. The code for the dots is the PHW, and I don't give away the code for the dots. The code is proprietary. And so I don't make that available. You can always buy the PHW indicator if you're interested, but I didn't give you code for that. Sarah, thank you. I think you're really cool. As another woman, I love to see intelligent, successful women traders. I really appreciate that. Thank you so much. Okay. Will my bands work with momentum charts? The bands will work with any time and date priced bars. And is there if there's not anything else, I'm gonna give it back to you, John. Oh, can I provide an overview of the SunnyBands 5-minute E-mini strategy? Sure. I'm not through coding it yet. I'm still working on the code for it, but it is using all the rules that I use to trade SunnyBands on an automated fashion. So it will trade automatically for you. And yes, it talks directly to TradeStation. It's written in object-oriented programming. And right now it's doing really well, but there are some things about it I don't like yet. So I'm not making it available yet. But let's see, I don't like to leave things running while I'm asleep, for instance, even though it's automated. Your internet provider can go out, TradeStation can crash, TradeStation can lose its data feed. There are so many things that can happen that I don't let it run in fully automated mode. So while it does a great job of pulling profits out, you still have to watch it. Thank you, Beth. I appreciate the comments. And John, I'll turn it over to you now if we don't have any more questions.
All right. Well, thank you very much. Excellent
Thank you.
presentation. We learned a lot. Hope to have you come back in June when we have our next summit. And if you want to take advantage of her offer, look in the chat box on the right and you will find a link to a dedicated sales page.
Oh, you know
So,
what? I'd like to say one more thing, John.
go ahead.
Most of the stuff I offer on the website's free. So there's a free technical analysis forum coming up. It'll be 4 weeks starting April 5th. Go to my website and you can sign up for that. It's free. I offer a free newsletter every Sunday night. It's called Sunny Side of the Street. Let's see, I do a free trading room every Tuesday morning at 7 a.m. California time. So you can join on any of those that you want just by signing in at moneymentor.com. Thank you.
All right, very good.